In a year marked by hardship, drought, Hurricane Beryl in July, and flooding in November and December, Grenada's economy still grew by 3.7%. Inflation slowed down, falling from 2.7% in 2023 to just 1.2% in 2024, making goods and services slightly more affordable. Tourism continued to drive recovery. Total visitor arrival reached 525,000, with stay-over visitors rising by 9.5% and cruise passengers increasing by 2.8%. Yacht visitors, however, dropped sharply, down to 24.5%. Laurel Bain, chairperson of the Fiscal Resilience Oversight Committee, gave an overview of the committee's report.
In 2024, the economy is estimated to have grown by 3.7%, and this followed a revised growth rate of 4.5% in 2023. The growth was accompanied by a lowering of the inflation rate. However, in terms of unemployment, we noted that based on the labor force survey that was taken at the end of the third quarter 2024, quarterly labor force survey, unemployment was trending downward, and the unemployment rate for that quarter was 11.9%.
Construction grew by 2.7%, recovering from a deep decline in 2023. The retail sector expanded by 5.4% and manufacturing improved by 5.9%. But the agriculture sector was hit hard, sinking by 20.3%, largely due to drought and storm damage. On the external side, Grenada's current account deficit widened by 764.6 million, mostly because of rising imports. However, this was partially balanced by storm tourism earnings, which pushed service exports up to 1.8 billion. Bain said despite the granting of tax concession, there was also a record growth in international trade.
Sectors normally boost economic activity in the aftermath of a hurricane. The Froc, therefore, examined other indicators that may inform the developments in the construction and wholesale and retail sectors. In particular, the Froc looked at the revenue from taxes on international trade on transactions and noted that despite the granting of tax concession, revenue from import duties, VAT collected at the port, and the customs service charge increased in 2024. And there was also an 11% increase in currency in circulation.
Public debt rose slightly in dollar terms to $2.74 billion, but declined to 71.5% of GDP, a positive sign of fiscal discipline. A supplementary budget of $269.6 million was passed to support rebuilding in Carriacou and Petit Martinique, with capital spending jumping nearly 39% to overall $461 million. Despite the bright spots, Froc chairperson Laurel Bain issued a clear warning. She also urged the government to invest more aggressively in people, maximizing the country's full potential. Rena P. Thomas, GBN News.